Hey, good morning, guys. It's 11:26. We're going to be doing a trade recap from today, April 27th. I think I took three trades today. All did it really, really well. If you guys can't see, small account 25.71. So I'll just round 26% on the small account. Big account, I think I had a $900 day, so net total about 1,500. Some of you may ask why I trade on a small. I do this primarily when I alert trades. I know a lot of people do have smaller accounts, so this helps me with sizing proportionately. And then whenever I scale out, I don't really scale too quickly. I used to do this a ton when I traded on my big account because I'd have so much size on it, about 20, 30, 40, 50 contracts. I would see a 10% gain, and I'd be willing to either close full or take half out. Small accounts can't do that, so really focused. When I trade on my small account, is milking full moves, going level to level, in really, really high quality trades. So today was very good. I got about 26%, and I'll show you guys how. Let's go ahead and jump into the first trade, which is going to be Netflix here. All right, so keep in mind everything I mentioned, right? We have our higher low trend line coming up. It obviously broke with the candle print that we had on that day with the gravestone doji. Remember, we were looking for a lower high, especially in pre-market. Thank God that's actually what we got. If we just reset chart really quickly, right? We ended up getting a nice little indication. Oh, I did the wrong one. Indication that this was our risk, right? Where this would potentially stop. Obviously, I wanted to see it just under this little purple line, which is our previous day high. And what I ended up doing for the trade itself was I made like myself this little golden zone to go short in. This is exactly how it looked. This is where I wanted to go short. It was pre-market high, and then risk would have been up to 325.90, which is previous day high in the 50 SMA. Now, right off the open, the 15 looks beautiful. But if we go down to the 1, because I think this is where the trade was actually executed, we had a very low volume, high volume. Usually the morning opening candles are pretty high volume, and you get a big range with this. This is a very small range, and I expected to see a burst back into this little perfect zone right here. We didn't get that. We ended up having a small range, small spread candle on pretty good volume for the open, and really failure to go higher, right? Second candle opened, it ended up pushing up. We had this wick right here, and then very, 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 very low volume, right? The secondary candle, you'd ideally want to see it push out on higher volume, but this was kind of my indication, like, hey, this is the lower high. They're failing to get to pre-market high. They're failing to even get to this previous day high. And then if we go look at this as well, this was something I didn't show in the previous little part. We almost had a head and shoulders pattern too, right? Where we had the head right around here, left shoulder right around here, and then this was an extended right shoulder. It was keeping the higher low trend line, which was still, it was relatively good for bulls. But this is where I was looking for like the max threshold, maybe being around 330, but I wanted to see the lower high here and then a sell off. And that's literally what we got, guys. I mean, a head and shoulders, what it is, it's a failure to go higher or can maintain or break through that left shoulder and get to a higher high. In this circumstance, very low volume off the open as we saw. Let's go back to this really quickly. Right, low volume in low range or low spread would be the correct terminology. Failure to get to pre-market high or previous day high, and then it just sells off. And you guys can see the sell-off on the 1 even is pretty low volume, and it's not because sellers aren't there, it's because there's no buyers, right? Buyers wanted to back up and go to a level of liquidity where they know other players are going to be waiting in demand to grab shares there and then try to remarket back up. So this sold off on low volume within these 2 candles here, and really what it did is it pushed down to our previous day low, right? This was another opportunity because what it ended up doing was pushing off of previous day low, which I'm sure some buyers were at. It was worth a shot, definitely was. I don't know how much they would have made had they taken calls there, but this really just pushed down, pushed back up into VWAP, and ended up rejecting VWAP very, very cleanly. This was a secondary entry. If you guys ever see something like this, this is always a good opportunity. Let's see here. Yeah, this candle right here caught, but it was decreasing volume the whole way. So this is I wouldn't say this is an anomaly, but this is definitely a divergence because you're getting high range candles that are pushing down, but volume is decreasing. typically that is like an indication like, hey, I should be looking to potentially go long here. Where can I go long? We knew, if you guys saw the Discord mark, I was looking for 316. But this is also an indication that buyers are not there, right? You're not getting that two-sided style of trading, because every single trade has to have a buyer and then every single trade has to have a seller, right? You have to match the orders. But this was clearly not a lot of buyers, right? We had a little bit previous day low, but for the most part, it was decreasing volume all the way through. I think I ended up closing somewhere in this consolidated range right around here. Let's jump back to the Discord really quickly, because I think I ended up trimming the majority of this. Yeah, like I would say right around here, 315. Yeah, 20. I ended up cutting like 59, 67, 100 con, 120 con. I think I closed somewhere in between right around these two for bulk of my position. I did take initial profits, I think 54%, but it was a huge, huge win. You guys can see, I mean, I ended up taking about $930 on my big account from this. Um, Overall, really, really well executed trade, very well planned trade. Only thing I think I should have done a little bit differently, it was where I, pointed it out with you guys, right? It was the potential re-entry, right? You guys can always use some of your profits to re-enter, grab. It's what I like to call profit laddering, where you can grab a further out of the money position, right, with a little bit of your profits, and then try to take that trade a little further down or a little further up, and then lock in profits from the previous actual contract that you took, or shares, whatever it may be. I think this was an opportunity for me to really secure maybe 312 puts and then close my entire position out for the 315s, or maybe keep runners for the 315s, and then once it breaks this previous day low, take out my 315s and then ride the 312s down to what my target was 316. So that's the only thing I think I could have improved on this trade. It's all good though. Still a really, really big trade. But let's go ahead and jump into the next one. It was going to be a SPY loss, and I think it's really important to point out this loss because it was so well mitigated. It wasn't anything crazy at all. I actually went 1 DTE to protect myself as well, because I knew I kind of was in like the mid candle. If you guys know, I don't really like to trade the mid candle. I like to trade low risk zones, which are my highs and my lows. And then I will show you guys Google, which was that was probably my biggest win of the day. And then after that, I took a plug trade, which was a swing, and I will show that as well. So it'll be a 3-part little series. Let's go ahead and jump into the next few. Google was a crazy one, guys. This was something I had been hawking for so long, right? My whole theory behind this was really tied into these dark pool prints here. I ended up seeing these kind of print, which is usually an indication of a potential sell order when it's to the upside for a big player. To the downside, it's a big buy order. So these act like kind of magnets, in the sense that there's a lot of liquidity available at these marks. And typically it lands on an even number, because it usually ties into a strike price where there's a high amount of open interest, or somebody's just trying to get something filled, right? Long story short, there was one at 112 and another one at like 110. But it wasn't, it wasn't once but twice. Actually, so this, I lied. This was the actual earnings report. I wasn't zoomed out enough. This was the initial 112, right? 112.15. This was 112 flat. So there was already like a point of interest at 112 for me. And then obviously for earnings, you did see that gap up to 110 and a sell-off. It slightly broke the head, which I've been eyeing for a long time on this head and shoulders pattern. And really, honestly, for lack of a better word, kind of blue-balled the trade. Microsoft ended up being what seemed to be the big winner from earnings, which it was. I'm not going to take anything away. But I think a lot of people were really bearish on Google without realizing that Google's entire business model is on the line with the new AI integration. And I think it's going to be a big, big steal. I think they're going to implement and are doing a lot of stuff behind the scenes. And I saw a lot of big orders kind of coming in. That 112 really helped out with my thesis as well. But we were stuck in this range for so long, and I think a lot of people were looking at this head and shoulders, left, right shoulder right here, the head obviously here, and then I think it's going to mess up my chart if I do my MAs. Yeah, Weeble's a little bit weird, but we had our MAs here as well, so it was pretty clustered in the sense where this looked like a head and shoulders. However, what really stuck out to me besides those prints was the fact that this left shoulder wasn't the highest volume, right? You had the head being the highest volume, and then you ended up getting this higher low that caught right here. You had this rejection right? Obviously, that should have been the move from here on a break through the higher low and sell back down to 99, but this ended up catching, right? And I think a lot of shorts actually ended up getting trapped right underneath this low. You guys can see it broke under, and then it wicked right above, and then you had earnings, right? Actually, I think earnings was this day. I'm sorry. So this was earnings day, right? So I think it broke below the higher low and really trapped a lot of people on the IV crushed cons. And then today, obviously, you had that big move up, and really invalidated any additional shorts that were playing this, especially swinging, right? The 106.59 right shoulder. So I think we're going to get another big move tomorrow. That remains to be seen. But really, right, if you guys go back and you look, 106.59 was the big spot that I was looking at. And then 105 was my additional spot. If we go to the hourly here really quickly, you guys can see just how well respected on the hourly. You can look at candle bodies primarily when we go a little further back. But for the most recent action, right, if you guys look at this green line, 105 was almost a line in the sand where it really was trying to hold above. It sold under, right, and ended up pushing up, held here. This is an hourly, so you can't tell that well. But on even the day after earnings, was trying to hold 105. It sold off. It even retested it here, giving indication that this is a pretty big level. If you guys don't know, retests are an opportunity for that specific side to get out break even. They put a lot of effort in to get back to that spot. They close out, at least break even. Sometimes a lower loss than they should have really taken, and then they close out, and that's why you get that aggressive sell-off after, because you have them closing their positions, and then the opposing side either shorting or longing. But this was a key level because obviously it retested here, sold off, and then this morning, right, we had this big move up on the hourly. And I want to show where I ended up taking this trade from a 5-minute perspective, I believe it was. Might have even been a 1 once again, because I trade with 4 charts. So, yeah, it was right here. If you guys take a look, we'll go to Webull really quickly. I'm sorry, to Discord. Discord, right, so I was looking, and Discord knows I've been looking at this one for a long time. So immediately kind of mentioned here, like, hey, Google looks good now. We were looking for that 105 base. I was talking about it in the chat as well. If you guys enter on the 105 flag, cool. If not, wait for an EMA pullback off of the 106, 150, I'm sorry, 106.35 to 106.59. And if we go back to the chart, right, this was the flag initially on 105 that we were looking for. Right, this was pretty low volume sell-off. You guys can see it right here. And then it increased in volume for the breakout. And if anybody had missed this, it was pretty easy in the sense that you could have taken this trade. It's a little riskier once you miss it, but you could have just waited for the 21 EMA for entries. I always try to reiterate this, especially when it's a trend day. A lot of people panic and they just jump in whenever they can. You got to wait for those pullbacks. You can use it on the 1 minute 21 as a very good kind of indicator to get long on, as long as it doesn't break it with super high volume. Right, this ended up pushing out, pulled back, held the 21 for the most part, and then pushed back up, and then it just rode the 9 for the rest of the way. Where was it though? I think, yeah, once we got it. And another thing too is if you guys are trying to trend trade, you don't want to use the 1 minute. You guys can just use the 5-minute 9 EMA as kind of like your risk, especially once you're already in for a good entry. We got in at the 105 level. You really can just ride this 9-minute EMA all the way up. And when it breaks the 21, cool, that's your close. But for the most part, you should be able to ride these on trend days very nicely, especially when they're expanded like this. When they're expanded, typically insinuates that you are in a very nice trend. So what I told people too, right, if we just flip back to the Discord, for anybody that didn't get the EMA pullbacks, or was waiting for an entry, you can do it off the EMA pullbacks or off 106.35 to 106.59. That level, right, if we go back to the daily, was this spot here. The left shoulder tied in with the earnings high, kind of that range. At least the previous day high from the earnings. So that was a huge spot really for bulls to retake and reclaim. Let's go back here really quickly. I think we ended up seeing just a nice little base on it. Yeah, so 15-minute based on it really nicely, pretty low volume. Ideally, you didn't get like a pullback deeper. I mean, picture perfect world, I think it would have pulled down to the 9 on the 15 or maybe the 21 off this level, which you didn't get. But still, right, ideally you see this range holding with not a ton of selling pressure or not a lot of volume that breaks this very apparent low too at 106.35. Didn't really break it. It just consolidated above it. Typically I'm scared of these ranges, but for this, right, I feel like a lot of people definitely got trapped from 105, and then now, right, once it started to consolidate on this, people that had shorted the head and shoulders, right, this left shoulder, are now in jeopardy, right, because this broke above and it's kind of holding just slightly. Those guys are probably going to panic the longer we sit in this range. And still, right, you didn't break the 9 EMA and the 5, it just held here. And then as soon as it broke out, right, I want to mention too, remember how I talked about institutional levels? I don't know if I said the word, but it's the same thing with like ES and Q. There's certain levels that are whole or round numbers that institutions just trade off of. It's easier to get your fills there. It's easier to gauge risk reward, right? It's much easier, and it's the same way with equities or SPY or anything. A lot of these things are going to hit whole or round numbers, and then especially if it has a high open interest, because they have to really consider their delta or their gamma exposure. In this instance right here, there was a ton of delta exposure here at 107. So I wanted to see a breakout above 107. Ideally though, this was the spot to go long at. I didn't take it here. I just felt a little bit iffy. I didn't really know what to risk, to be honest, for an additional entry. So once I saw it reject 107, pulled down, held this level, I waited for the base of 107. Okay, base of 107 was my indication to go and try to get another position to add on to my initial one. And really, right, it broke down, started to move up. You got this 1 minute retest where it essentially held 2 minutes, or yeah, I would say just a minute, honestly, before the secondary candle really took off. But you guys can see how quickly the cover happens above this institutional level at 107, right? These guys have to de-hedge and they start to de-risk, and that really helps propel this a little bit higher. I'm sure this range right around here helped as well, the 106 level. That was a big spot for anybody swinging or trying to short that right shoulder. These guys just got trapped, and then you saw this really extended move off of 107. Now, I ended up alerting this once again for the Discord. I did it as a lotto just because I was a little bit unsure, right? I got everybody the safe entry off of 105. But right around here, I mean, it was 9 cents, guys. I used some of the profits from that initial one. I made sure to clarify that. But within, I think it was that first candle, right, that I had shown you guys off of 107. I was already up 16, 27, and it just slowly ramped. I don't know what I'm at right now. Google's still going, but last I saw was 183 to 200%. Just a nasty trade on that one, and very simple. Just being able to understand where a lot of the open interest is. I used a little bit of tradie ticks too, if you guys haven't heard of them, to really gauge that delta exposure, and really see what was the key level for bulls to break above. But once again, just a very clean chart, very clean trade. Let's see where it ends up going. Ideally, I think, this always happens to me. One second. I think ideally this pushes to 109.17. In a picture perfect world, guys, I do think that Google ultimately tests up here. I don't know if it'll be this week. We'll see how Amazon earnings, if it does propel this a little bit further. But I do think 112 is kind of written in the books for it to be able to essentially reach. But that was it for that. Let's go ahead and jump into the SPY loss, and then we'll kind of call it there. All right, guys, this is going to be plug. This is a swing that I ended up taking from April 25th. Nothing super crazy with this just yet. If you guys look at the chart here, this is the weekly, and you guys should be able to see, right, we have decreasing volume on the weekly with decreasing spread, right? Remember we talked about spread a little earlier, means the candles are no longer reaching the same price distance as before. You can see this had a very big high to low, right? I think the entire spread was high 1176, low was 924. But then you guys can see here the spread is getting smaller and smaller and smaller, with volume decreasing at the lows. That typically means that essentially sellers are getting exhausted or they're losing interest, and they'll probably have to mark the price back up to reinvigorate, right? Volume buyers, and then new sellers will jump in, and then they can collect that supply and then run it right back down for a potential new low, right? So that's really what started my interest, was the low volume, low candle spread here at the lows. And then if we tie this into another part of the theory, right, look at the weekly, or I'm sorry, the daily. Look how high the volume is here at the bottom, right? Every time it goes to the top, you have kind of decreased volume. When you hit the bottoms, right, you have higher volume. But overall, look at the increase in volume here at the lows, right? And we know this is our weekly right around here. I don't know the exact days. I think it cuts off like right around here, and this is the second weekly here. But regardless, you guys can see the high volume activity. There's a big buyer that's getting in plug around, I would say like $8 to 9. And I wanted to pull up now really quickly my drawings. I was really looking for 9 to hold and kind of be my target for this, because I ended up taking the position on the 25th. I think we ended up talking about a 10 call. Yeah, 10 call. 37 was my initial entry. I only took one contract initially. I don't want you guys to see that. That's something else I'm looking at. But then we didn't really touch this again until the 27th. Ended up hitting about 6% or so today. I ended up sizing it in just a tad, so my entry was a little bit off. But really was able to get this up to about 25-30%. Unfortunately, I took full profits just because it felt a liquid again. It felt like that big buyer came back in today, and then he disappeared again. So I really didn't like the feel of it. I'm sure this is going to end up working out, though, where I think this is going to get pushed right back to a lot of the liquidity and retest this weekly level here at 1030. But if you guys go back and look really quickly, right, the whole thesis from the trade, 9 was kind of my target, where I wanted to see it claim above and then really start to rally back to 944. But I wanted essentially 865 to 817 to hold. Reason I had these levels, if we go back, right, this was really a big support and a pivot, which really started the run up back during 2020 for plug. Obviously, we had this breakdown here, but a lot of support was really built, and the big run stemmed from this $8 level. And then, of course, right, we had 865, which was the pivot from right here, right? You guys can see in current price action, this was held pretty nicely. I took it on the 25th, of course, so I was hoping that 865 would hold. It wicks and broke slightly below. I probably should have added to this position because 817, or that $8 psych level, was never broken. I think I went down 30% on these, but today really claimed this level again, and I was able to add them as it started to break out and move up. But yeah, such a really clean trade, right? And I think it trades back to 944. Going back to historical price action again, this is where that gap had previously, started the big run up. It was obviously filled with current price action. We go back again. Of course, right, it got filled here. But I think that that's an imbalance, right? We didn't have much consolidation or trading range here. So I think it's an accumulation essentially on plug on the weekly, and you're starting to see it here in the daily for a mark back up to $10.30. I should have held a little bit longer. I'll probably, like I said, add back in if I do see a bigger move over 9 or potentially 944. I do like the odds of this getting marked back up. But a really clean trade. I mean, it was very, very nice off the morning, right? We ended up breaking down yesterday, sold off to lows, 837. So a little bit above my risk level. Gapped up in pre-market, held this current level here, which was the really key level for the lower high from the sell-off date. And you guys can see here, look how low volume the sell-off is. And once again, it was a pretty recurring theme across the market, especially we saw it in SPY and a few other names, where we had this flag formation onto the previous lower high. This was an hourly. You can also see it on like the 15. But really a flag and an SR flip to a T, slightly above, of course. I mean, if we make this a little bit tighter, right? Because this broke through a little bit, but it didn't actually, break out. So if we take it from the wick, that's as good as it gets, guys. I mean, 870, the bottom of these candles were, like 872, so 2 cents off. And you got that SR flip, and I'm sure these guys, realizing they couldn't break it down lower to 8, like the low 8s, ended up covering their position. And that's why we had such a big rally. Look at the volume on that. You know, it was massive, massive volume that really pushed it to 9, hit 9. I think this is where I ended up taking majority profits because this is where I wanted to, you know, see this thing hold. I got a little stagnant around 909. It's like 913 once I saw, you know, once you got this test here at 9 and it didn't push back up for a new high. Ideally, you would have liked to have seen this level, right, come down, pop back out, and then get a new high, and then you ideally get this break, base, and then go again. I didn't like the stagnation here, and I didn't like how it started to fail for a new high. So I ended up closing out, as you guys saw, for the full 25, 30%. But if it gets back above this $9 level, whether it's pre-market or something like that, I'll keep an eye on it for it to potentially break 916 for a re-add on that position. Because I do think, based on the weekly, once again, I think that this chart is really primed for a move back to this like $10. I mean, looking at the weekly, I think it can go potentially back to 11. But to keep it very, very conservative, you know, I think this would probably be the most immediate level, 1028, and then 1155, somewhere in that range if it decides to continue. Very, very nice confluence between the swing low and the swing high here. So, yeah, that's my trade recap from the swing this week. And then I think the last one, I'll go ahead and do a quick recap of my loser, and that's from SPY. Last one here was SPY. And I want you guys to understand too that, you know, you have to learn when to go risk on versus risk off. And what I mean by that is knowing when to go 0 DTE, knowing when to put on size. If you already have 2 great trades like I had and the Discord had with Netflix, Google, you know, it's okay to take feel out trades, but make sure you size down a ton. And if you guys take a look here, I even went out a date on my expiry, right? So I grabbed tomorrow's expiration for the 402 puts. I just felt like the market had rallied already so much, and it started to stagnate a tad, where some underlyings were just consolidating and others were showing a little bit of weakness. And then I remember seeing SPY got into this little range, right, where it looked like it had found a top. It started to pull back on a previous high a day level or orb high, and then it just stuck there for a little bit. So I felt like it was worth taking a stab and risking high a day. I took it at 3.2. I think these got as high as 3.7. It went around like 10, 15%. Nothing crazy, right? But I did let everyone know just to be ready to stop the rest. I saw Google finally getting its move that we were waiting for in the Discord. I maybe extended this a little further than I should have. I think I could have stopped out for an 8% loss. But ultimately I took the 17% stab. I only had, I think it was like 2 contracts, or no, I only had 1. So yeah, I mean, that's what I mean by being risk off. You already had 2 excellent trades. If you want to take a feel out trade, you can start small, right? Know your risk, identify what you're willing to lose at, and then figure out where you want to take profits. And it's so key to do that, because now you're not emotionally attached to the position. You could take puts risking high a day. In this circumstance, right, and I'll switch back to the chart, I wasn't going to take profits until it broke back down to probably low a day right around here. So I mean, that would have been a really good trade, 407 to 406.75, and then maybe if it got a bounce and showed weakness on the bounce, I would have gone short again. So let's jump into the actual trade though. I took it at 8:01 my time. So yeah, so we got the break over this orb high, this 30-minute orb high, or it might have been the 15. Either way, 407.50 is a pretty key level. Broke above, and then it broke down, right? We had our first higher low of the day, I would say, at least at least an apparent pivot from what I can see besides the double bottom here. And then what it ended up doing is it slowly moved up on decreasing volume. I'll show you the 5 as well, but I took it right here, 8:01 at the top of this candle, and I was risking 407.85. Now what ended up happening is it pushed up to this level. It actually did reject, and this is where we went green, but they held above this key level here. You guys can see we have kind of like a micro higher low just from here to here, right? You guys can see did hold above that pivot, and then that's really, in my opinion, what ended up setting this thing off, because it pushed up, pulled back down, right? It wasn't looking too hot at this point, and then what ended up doing is pushing back to this level, pulled down again, right? And if I'm going to cheat a little bit, but you can see another higher low from a micro perspective, and then it finally got the big breakout, pulled back down onto the level. What really intrigued me though, like I said, was the risk reward on that trade itself. If we go back to the 5, let's just zoom in really quickly. It did look top for the time being, right? It wasn't a very clear flag. It showed some consolidation at this range where both sides were definitely fighting. You had the high volume rejection right here. I mean, of course, always that first 15, I would say, 30 minutes are going to be your highest volume. But here, pretty high volume for the rejection, and it stopped price. It really pushed it back down and kept it in this consolidated zone where we had, the same, essentially the same candle closes. And then your lowest volume candle was right here. You guys can clearly see the doji. I think that was the indication that, hey, this is going to fail to go lower. And then looking at your EMAs, we started to get the expansion here. So you kind of already see the trend forming. Once you get that fallout of volume, it typically means that the opposing side is either going to give up, right? Because they can't push it lower, which is that failure to go lower. Or what they're going to do is wait for a little bit different of a level, right? We ended up getting the breakout here with, I wouldn't say a high volume either. There was increasing volume, but they really had their shot, right? Like I said, they were waiting for a different opportunity. I think they really try to short the weakness on this 5-minute candle because they came in with very high volume on this one. We're only able to flag it down in base on this level. Very similar to this one at 407.53, but here they were able to pull it down on a flag. And that's funny enough, that's actually where I ended up flipping. I just marked out, hey, looks like a flag, or it could have been a UTAD potential high day target, because we ended up taking that flag. And I think I got in. I don't remember my entry, to be honest, but I did snag. Where was it? Yeah, I didn't put it on here, but target was the 9 EMA on the daily for the call side, which would have been a really good spot. It was right up here. So this was my target for the trade. This little white line. I'll go ahead and switch it over in a second. This was the flag I caught right here. It was a very small one, right? But I was trying to use the EMAs to guide this out. But I took it here and then ended up closing it high a day for a 20% win. I think I took full profits because I wanted to focus on Google. But really, remember what I said, this level here, they were looking to short the weakness on this candle. So I think a lot of sellers actually ended up jumping in here and had 408.41 be the risk as opposed to the 407 like 80 range. And because you can clearly see the volume was, their goal was to hold this. So it broke above slightly. They were able to push it right back down. But then that 407.53, that initial level, right, that you guys can clearly see was the defined support on the intraday time frame. It was also a VWAP on the day too, right? So they pushed it down. Same exact scenario as here. You have very low volume on VWAP. You had that head and shoulders set up as well. So I think a lot of people tried to short the head and shoulders thinking that it would fail and break lower. But once again, you were not breaking this level, guys. It's a failure to go lower. And typically at that point, right, underlying started to rally and started to break out of their consolidation. It's always important to look at some of these other tickers. I was looking at Amazon. I was looking at Google. Amazon went on a huge, huge rally. If we just go switch to Amazon around that time, I think, yeah, Amazon had just started, I think, the second leg right around here where it popped up and it started to consolidate and then it started to move higher. So looking at Amazon, Google was another great one you could have looked at. Google, same thing. It was just a slow melt up all day. So, I mean, that's why I did end up bailing on this trade. Once this got to high a day, I just wanted to focus on underlyings. I felt like they were moving a little bit better. But if you guys get caught in a situation like this, understand that it's very important that you don't consolidate in a range like this, right? If you get this big breakdown with the high volume kind of being in this range, and you get back to a previous support where they were basing at, and now you have VWAP, you have your 21, your 9, and they're not getting that breakout on high volume, right? It's going to favor the side typically where the EMAs are curled too. It's going to be a pretty nasty move most of the times. I've seen times where it does break down, but that's very rare and few and far between. So this was very easy to spot once you started to see this consolidation, these dojis really print on really low volume at the same level that this happened to last time. It's going to be the same exact pattern. Look at, even right here, look at the volume that ramps through and breaks out of this level here. And then it pulled back once again. This was an entry on the 9 EMA. It wasn't necessarily a flag, but you could have gotten. Once again, I brought it up on the Google trade recap. You can look for these entries off the 9 or the 21. And it pushed out again, right? Pulled down to the 9, broke out again, pulled down to the 9. So it was a very easy trend day. I know a lot of people do struggle with this, especially when it doesn't make sense. But this happens a lot when you're going into mega cap earnings. We have short. I think it's short. I can't remember the. Oh man, we have some kind of short settlement date tomorrow or something. I think it's on Friday. But people also don't want to be in front of the oil sector. They don't want to be in front of the end of the week. They didn't want to be in front of Amazon earnings. They also don't want to be in front of Apple earnings. So I mean, anytime that you're getting a failure to go lower and it's taking a long time leading into something that could be a catalyst, you're typically going to see that side give up, right? They don't want to spend too much time on that trade. So pretty easy move here on SPY. Like I said though, did take the L on this first spot here. Was able to identify it, once we got this flag here pushed out. Ideally I should have added in this range, but once again, we were in Google. So that was the only loss on the day. I tried to be as transparent with it as I could. I only took a 17% $5 loss. It should have been around a 9% loss, so even less, $3. But I did let everybody know to take the flag. Just let them know I was doing a full close on flag just because I couldn't manage both. And then I mean, this is the gains. I didn't want to give too much of how heavy I was into Google, but 30% win was almost $550, and that trade ended up going over 200%. So that's pretty much it, guys. It was a big day in the market. I think I made 22%, like I said, and then 50% on my other account. So massive day overall, about 1,400. I'll have to go look at the numbers again, but yeah, that was the recap. I hope everyone has a good day. Trade light going into tomorrow. We do have ZOM earnings, and then we have the repercussions of Amazon, and then we will be going into Apple and some of the other mega caps next week. So don't force anything. The market's always going to be here, and trade safe.